All right. So like always, we'll do a little broad market outlook, a little big picture breakdown, and then we'll go into some top ideas. And as always, if you guys have any stocks you guys want to go over, just post them in the chat and we'll get to them. So I did make a little bit of a change to this this little watch list on the right hand corner to make it a little bit easier for you guys to kind of follow along. So I listed kind of the major sectors I want to run through, from the strongest sectors to the sectors breaking down, and then to the weakest sectors and the ones to avoid. So obviously right now, crude oil and anything energy related is kind of, topic of discussion. And, just like we kind of had like the lumber talks, I guess it was kind of like last year when, those commodity prices went pretty crazy and then they very quickly kind of reversed. I don't think that's going to be the same with energy because it's just so much bigger than just people buying 2x4s, but it is a bit parabolic. This is kind of a little, short term, like a little bit of a blow off top that, it was up, maybe 10% this weekend, and it's kind of fully retracing that move. So maybe that enthusiasm that traders have had of the last couple of days is kind of, losing some momentum. And just on the flip side, if we think back to, and it's very hard to remember, during the pandemic, crude oil went down to basically a penny a barrel. So just as crazy it can get to the downside, it can get just as kind of nutty to the upside. But chart wise, pretty much the magnet or the retest area that this is going to try to head for in time is going to be this like 140 area. And just like a few weeks ago, or maybe a few months ago, it was, will we see $100 a barrel in oil? And, we've quickly ran past that. And now it's kind of a chip shot to get to this retest. And as always, there's going to be sellers that are going to come in there. So that would be kind of like the high five sell signal sign, from an oil related trade. But in the short term, this might be a little bit, a little blow off toppy that it might have to kind of pull back in a little bit. But again, we're not really trading crude oil, but that's just kind of a little update. Of course, along with that, the energy sector is kind of gapping up into this major resistance area that's held up for the last, 5 or 6 years. It really hasn't gotten above this 110 level, which now we're gapping up right into it, which, just like when a stock gaps up on earnings and it has this huge gap up, it's very hard to find a lot of participants willing to kind of chase that gap up and have it gap and go, where you kind of have a couple of people try to buy it and then it kind of pulls back and works its way, lower. So again, 110 area is probably going to be some resistance in the short term, but again, in the longer term, the bigger move, like for me personally with energy, like I'll look to rebalance up here in this 145 area when it retests. I won't be really too concerned, but from a short-term swing trading standpoint, if you are in some of these swings, seeing these names like that, looking to take profits kind of almost today, it's probably gonna be one of the best times to do so in the last 2 years. Utilities have still been very strong. Again, that's like the flight to safety when people are nervous or smart money's nervous. They run towards utilities since it's a very safe sector. It's they're going to just continue to provide the service they do. Nothing's going to really change there, so it's not too surprising that this sector has been pretty strong lately. And the REITs have also been doing all right, kind of still flagging up here, and the consumer staples as well, both doing pretty good as well. Again, consumer staples, you're going to keep buying toothpaste and stuff like that. It's not going to really change no matter, depending on the market. You're still going to buy those things you need on a day-to-day basis. Moving over to some of the weaker sectors or weaker broad markets. Again, the SPY is still in this breakdown stage with lower highs and lower lows. Until that changes or until we start to base out, it's kind of, that's kind of the status quo, that we're just, we're in this breakdown stage. And, as the 200-day now acting as resistance, it's kind of confirming, this downtrend. So we don't want to fight the trend, as, the obvious, Wall Street quotes always use. We can see the same thing with the NASDAQ, same thing in this same breakdown stage. This, this end of February low for most of the major markets, that's like the line in the sand right now. But as we're starting to see, we're probably going to see a retest of that. And if we do, oftentimes, we're going to see probably lower prices in the short term. Biotechs have been pretty weak as well, just basically Hing over. And again, really nothing stopping it once it kind of takes out this low to, see the prior kind of 2020 lows in this area, which if it was to hold this area, this $90, $100 area, could be great in time. Again, huge range that the name is trading in. We don't want to see these sectors or stocks breaking down, but in reality, that's just kind of part of the game. We're seeing this also in small caps, where same thing, below this 188, just like we saw, what we'll see next with telecom, you'll probably see an eventual move retracing this entire up move. So you had the breakout. We thought this was a breakout pattern forming. It topped out, and now we're starting to see those H patterns as it works its way lower. Moving on to the weakest sectors, again, telecom is kind of showing us what could be in store for the broader markets when we stay in this downtrend and we don't base that trend just continues to follow its course. We mentioned before with the S&P, the 200 was acting as resistance, and we can see this here as the 200 kind of was rolling over and telecom was just kind of getting smoked, as the days went by. And with the last two, with consumer discretionary and tech, these were both the strongest sectors during the run-up, and now are now the weakest. And that's a very common thing, just like we're seeing with energy. Energy was the weakest sector for basically all of 2020, started to wake up in 2021, and now it's the most popular sector when it was the weakest. And the ones that were the most popular, the prom kings, consumer discretionaries and technology, are now kind of the laggards because they ran up the most during that run up. So it's not very surprising when we see this, even when you think of like individual stocks when they were, the craziest names on the run up, and then when they're down, 80% off highs, you don't care about them anymore. Same thing with the individual sectors. So moving on to a couple of top ideas. Again, LMT was a really great swing. That was called up through the alpha alerts. And for now, again, for the guys that are still in it, I know Dorian, who's not on this, has a decent position on M1. This is kind of the time to stick with it. And if it does start to roll back over, make sure you're taking some money off the table. If it does roll over, under 430, under 440, could make sense to take some profits. And on the way up, who knows how high it can go. Oxy, again, this is going off with this energy sector. I personally got out of this, again, pretty much a day too early. That's my own mistake, but given that 3-day run up it had, it just seemed like, a slam dunk to get rid of it. Obviously now, not the best, but for the guys that are catching this gap up today, same thing. This is, up more than 100% in a few months, up nearly 50% in a couple of days. You kind of have to expect that this vertical trend can only last for so long. And maybe this is kind of the blow off top today. It'd be hard to expect this to gap and go and continue this near vertical run that it's been on. And yet, Icon selling his stake today. And he's a pretty smart guy.
Django, don't forget.
Django, yeah. Django has kind of all the insider secrets in that name. Moving on to a couple of names that are setting up. Again, it's very slim pickings out there. Even for me, like these are my 3 best ideas in these stocks that I personally never traded. So it just kind of goes to show you that there's not that much out there right now with, again, the market breaking down, but these were just a few little bases that I was able to find. So this BCTC chemical company, it had the breakdown stage. It's now starting to base out. It's been holding up this little area, and we can look to potentially 142 and then find, a tighter stop if and when it wants to go through that area. This HUBG transportation company, they do air freight. This has been flagging. 87 has been resistance for a few months now. For now, kind of 82 seems to be the stop. So this little blue sky breakout. If the market does kind of catch a bid and we can, start to work our way higher, this is probably going to be one of the names that will have the easiest time to drift higher since it just needs to get above 87. And lastly, Helen of Troy, which is just a cool name in general. But separate from that, again, same thing. Breakdown stage is now started to base. We can see some marginally higher lows here, so probably about to give it to 195. But for now, we can buy up through this 212 base, and for now, kind of stop versus like the 200 area. So you're still risking maybe about 5% in the name. So again, very slim pickings for me personally. I have no orders in the system. The only thing that I really did last week was, again, prematurely take profits in Oxy, and I am selling some Apple today, just M1 wise, just because this is pretty much my only winner at the moment. And I'm just going to rebalance, take some profits into this name and rebalance it back into CRM and Etsy, some of those names that look a little bit more appealing down here than they did, a few months ago. So with that, my little speech is done. Heaven, if you want to jump in and go over anything kind of you're looking at, and then we'll go into the member ideas.
Oh yeah. I mean, honestly, right now I'm kind of just seeing if some of the major names that we usually look at are gonna hold up that recent low that they put in back in late February. Stuff like Amazon, stuff like Microsoft, AMD, all these tech stocks. I'd like to see them put in a new higher low. So it's mostly just hand sitting when it comes to swing trading stuff, just because it's really not my strongest environment right now. So just watching those names and seeing how they set up, seeing what holds up. Then we got some ideas from some members here. Kusha, the first one is EVH 2825. Looks like that one's leaving the building early. It's gapping up pre-market to like 29.
So that'll be a pass.
Next one is SNDR 2725. That's a nice level.
20, yeah, 27. Yeah, I mean, looks good. Definitely, you might have to give it, I guess, $1 or $2. Not too bad.
Yeah.
Trucking company, yeah, looks good.
We got JBHT 207. Also looks pretty good.
Yeah, this looks really, yeah, this is 207. Yeah, I see what he's looking at. 207, 209. I think all in this area, just again, buying through that all-time high area just definitely seems to be, a nice lower, if you're buying it 207 versus 200, risking a few percent, definitely makes sense. A lot of things in your favor here.
Yeah. Next we got HUBG, HUBG 87. Very similar setup to that JBHT.
Okay.
You already had the game plan on that one. We got Chung, who's looking at CVTA versus at 5250.
Look at this.
What happened there?
EV.
CTVA? Yeah, CTVA. That looks a lot better.
I don't even know what that was.
Yeah, that was weird. Yeah, flag at highs.
Yeah,
Consolidation looks pretty good.
High 50. Yeah, 5250, even 52. I think either or you're going to be, you'll be all right. And then it just seems you got to give a verse. You definitely got to give a verse 50 for now.
Yeah. Next, we got Blake, who's actually looking at CERN, CERN, which is a great lesson here. So everyone listen to this one. As somebody actually mentioned it in the chat. So this is a buyout. And the simplest way to see that this is a buyout is it had a huge gap up on basically no reason, like that wasn't earnings or anything like that. Huge gap up, and then has basically just done nothing for the last 3 months. We do love tight consolidations and long consolidations, but this is too tight and too long.
Yeah.
So something to just keep in mind is like when you see those huge gap ups and then just do nothing, to just stay away from that, because that's not going anywhere for you.
Yeah.
So you can just close that one, because within a few months it won't even be listed anymore.
Yeah. And that's the tricky part with that lesson is if you haven't seen it, it's hard because you don't really see the charts post. You never see the charts post buyout. So it's a very hard lesson to learn. But just like you said, when you see all these little dojis, like these super tight ones in a name that, just gapped up, $10, it's just like it's 100%. It's always a buyout.
Yeah. Next one, we got Corbin looking at KDP 39 versus 37.89.
Dr. Pepper, love the soda. Yeah, it looks great. 30, you said what, 39 versus 37?
Yeah, basically below Friday's low.
Yeah, for 38. I mean, I definitely, if he's expecting a breakout, you want to see that continuation immediately. So it definitely makes sense, giving this thing $1. Like I would take this over like Helen or that BCPC, like the ones I was looking at, like I would take this one.
Yeah, just something to consider is that it is a slow mover, which isn't a bad thing, but you kind of have to have that mindset already in your head that this might not go to 45 in a week. It might take a couple weeks. If you just look at what it did to go from December to February, which was 33 to 39, $6.
Yeah.
It takes a while. So you just have to be patient with these. But they can be slow grinders. And that's always, especially in this market when everything's super volatile, if you can find those slow grinders that are consistently going up 0.5% every day, that's a great move.
Yeah.
When you see
when you see this little shakeout, that's usually like a little determining factor, like realistically in the short term where the breakout's going to go. So it's like this name was holding up at 39, pulled back to 36. Like, all right, it probably got at least $3 in it if it wants to push up. So that's where it's like, all right, I'm going to buy 39. Risk is $1. I can more likely make 3 to 1. And then that's a determining factor if you're going to take it or not.
Definitely. Mike is looking at TRV 175 versus 170.89.
TRV. What about this TV? I think we missed one. TV.
No, he was just saying thank you very much.
Oh, okay.
Come on, Ben. Get with the program. Come on, bro. TRV. This one is finally looking good. I had so many people in the lower chats posting this chart a few weeks ago, and I kept saying like needs consolidation, because it was kind of just going straight up from December to February. And now it's finally getting that consolidation. So everybody was looking at that. Now it's really setting up for a good low risk trade. So I like this one.
Yeah, it looks really good. Big fan of Travelers.
Yeah. Then we got eBay 57 from Kirtman.
This is going to be really tough. It is even like with me, like looking at these bases. This is like this isn't like a significant base in the slightest, but it's at least missing out for a couple of weeks. Same with the eBay. It's like, I would much rather be buying like that KDP to 39 than trying to buy 57. You got to give it versus 53. So you're risking $4 and it's like, you're going to be battling with 60. If it bounces to there, you're going to be battling with 62. So there's like a lot of things in the way if this trade does start to work. So this, you might want to see it develop more. Like this is still kind of in this like downtrend. Why is this thing not? Here we go. So you're still kind of in this downtrend overall, and you kind of want to wait a little bit more for that sideways, consolidation before looking to buy it on the way up. I think that might be still a little too premature.
Yeah, right now, I mean, it's in the stage 4. So you want to wait for that stage 1 to start forming and then start to buy when that stage 2 initiates. So you don't want to get caught out trying to be the first person into this move. Really nice reaction off of earnings. Like that's a good sign. Big move off of those earnings, like gap down hard, bought right back up and consolidating, which is great. But a week of consolidation after what is that? 1, 2, 3, 4, 5, 6 months of a downtrend doesn't really make up for it. So you want to see a couple months of sideways first. Next one he's looking at is Wolf 1850.
Okay. Yeah. So anything with a recent IPO, especially the cheaper ones, it's like I would just wait to buy the IPO high. Like that's just going to be like buying up here. You'll get the move from 30 to 60 in a few months, where this is more than likely going to smoke this low down through 16. And when it does, it's going to be at, 12 or 10 in a few weeks, where like, this is not really this is not really the spot you want to be risking in these recent IPOs.
Now,
so much easier to wait for.
need to tell or something.
Yeah. I think this one is just kind of a pass for now. Blake was looking at CTXS. This
buyout.
Also a buyout. Yeah. So when you see those going straight like that, it's most likely a buyout. Yeah. Next one, Kurdman was also looking at HUM 443.
So just going back now, I'll double check this about, but so when you don't see the gap up, this is usually what happens is like the rumors come out that CTXS is going to get bought out, and the rumor comes out, say here, and people buy into it and cause this gap up because they would expect the stock to get bought out for higher than what it's trading at. And then the rumor, it becomes news, and like, we're actually just going to buy it for $100 a share. And then people kind of get like, these people are pissed because now it's like they're not that screwed in it, but we saw this like a year ago. I can't remember the name, but it was like anyone you looked on social media was like, this stock's gonna get bought out, this is gonna get bought out. And the name kept gapping up. And they did get bought out, but they got bought out like $20 lower than what it was trading. So those people that were trying to get like in on in that buyout like ended up kind of losing money. But these are interesting because usually to get a deal done, it needs to be like in the shareholders' best interest, and it's not really in their interest for these people that are tracking the name. So very rarely do you really see the names get kind of bought out near their kind of 52-week lows. That's also probably a really bad thing for the company, but that's a different point for another day. Let's see. We got?
Yeah. Last one we got HUM 443.
43. I mean, so we can definitely see this like, blue sky area in this human up to this 470. This is the monthly. We got the weekly. So just very defined at this 470. And you probably could take, the 443 versus 420 or versus 408, but you're really just kind of going to be trading within like this range. Like best case, you can trade up to 470. And if you can make a trade between that, there's no harm or no foul with that. But same thing with this. It might be easier just to like let this name work its way back up to 470, let it consolidate out for, a couple of weeks or a month or so, and then just like be prepared for that 470 breakout. Like when you think of like LMT, it's so much easier to just wait for that major break of resistance up through that 400 than trying to buy in like 380 or 360 and trying to get in before that. So it might just be easier just to wait for that, when humanity gets back up to 470 and consolidates, and finding that entry that you can probably get that move to 500 plus, then, best case you'll get 30 points in it, but you're going to give it at least 10 to 20 almost immediately. But I would definitely think this over eBay. So that's anything.
Yep.
All right, guys. Any last words you guys want to go over? All right, guys. I think that was it.
Cool.
All right. Talk to you guys in the chat. You guys have a good day.
Later.